Okay, good morning, everyone. We're going to get right into the stock market charts. I want to point out the key things that I'm seeing this morning. Obviously, we're waking up to a big gap down. And again, that's expected when you start to see signs of a sell signal and opportunities to short the market like I saw, basically in the last week. The market doesn't give the longs an opportunity to get out, at least not at the very high. So oftentimes you'll see sell-offs really start to kick off with a big gap down, trapping in those longs. And that's what we're seeing this morning. On the SPY here, you can see the 50-day moving average is right here, and it's kind of marked in green. We closed below that Friday. So because we closed below it on Friday, that was one of my signals that I really was waiting for to remain short and actually to start adding to a short position in the triple Qs. Again, I like to short the tech stocks. Those seem to be the biggest movers when they start to move down, so that's how I like to do it. There's your SPY below the 50, and I pointed out previously we had hit the 50 1, 2, 3, 4, 5, 6 days or 6 times in the last pretty much all this year, the entire year. Today looks a little different. It's gapping well below that 50, so unless you see some sort of intraday recovery or maybe a gap up tomorrow, again, we can't really call that. I can't say, oh, it's going to gap up tomorrow. There's no technical reason why it would do that. We've broken some major support levels. We've broken the 50. As far as I can tell, this looks weak and we're heading lower. Now on the SPY, I think we also have the this other moving average, which is the 200, I believe, and that's slightly below. And so again, we have to just that's the 100-day moving average right there. But this is the area that I think that you would likely find some sort of support on the S&P 500, the SPY. And that's about 428 up to 430, depending on when we hit that. Again, if you look at the weekly chart, that's going all the way back to 2009. And you can see that's your red line right there. I have it marked out. We held support all through here. Held support. 2018, we broke. And then the Fed had been pumping us back up over it. And we hit resistance. There's the COVID drop, resistance. And as you move in, you can see that's that red line. So there, it's been support all of 2021. And we'll see if that holds again or if that breaks. Now, if we see a breakdown of that, and again, that's longer term stuff. We have to wait till that happens. But if we see a break of this, then I would say all of 2021 was a big bear trap or a big bull trap, likely the top of this bull market that started back in 2009, and we're in for a world of pain. But again, that's only if we see that kind of stuff start to show up. Let's move on to the Qs. Looking at the Qs. So again, here's your Qs. We're gapping below the 50-day moving average. The Qs hasn't reacted to the 50 as consistently as the S&P 500, but we're below there. Below a key level of support right there. We pretty much don't have any support till we get down in this range, 362.40 down to about 360.72. You can see there's some support there. We also have good support down here at 342.53. That's the area where I think at a minimum we're probably going to get down to. And so I would look for that. That's still a move of another 6-7%. So again, I think we're likely in for a correction, a major correction for this year, probably 10% at a minimum. And again, if we roll out, here's your bull market in triple Qs. It shows pretty cleanly on the weekly chart. So there's your 2009. See the big price channel? That's your bull market. And you can see really since August of 2020, the Qs has just been grinding on the upper end of that that price channel. So I could see us easily coming down to the top of the price channel, which would be down here, anywhere from 320, 325. I don't know when it'll get there, if it's going to get there, but we'll watch for that. And likely you'll get a reaction down there. I don't think we're likely going to just break right through. So those are some key levels to watch. Right now, I would say 342.75 and then down here, 320 to 325. Let's look at the FANG stocks. So these are the ones I've really been interested in watching to wait for them to break for weakness to really start to show up in the markets. So at this point, we've got a pretty weak market as of today. Not a lot of strength. Amazon had this bull trap back here, and we've been back within this big sideways range. And I don't think as far as I can tell, we're heading down to the bottom of the range right now, which is going to fall down about 2937, somewhere down in there. That's where this looks like it's going. Google's, let's get back to the daily chart here. Google has been, pretty strong. I mean, obviously this is coming off the March 2020 lows, clear uptrend line, still within the uptrend, slightly below the 50-day moving average. So we could be heading down to the bottom of the channel. Bigger picture, it still has an upward price channel, so that has not been broken. But you do have big negative divergence that's been building for quite some time, signaling that, that there's likely going to be a sizable downside move on this one. So keep an eye out on that. Again, this looks like it's heading to the bottom of the channel, and then down there we'll need to watch for a break. The next major sell signal would come on a break of that lower trendline support, and then that's going to set us up for, probably a pretty sizable move to the downside. Microsoft created this short-term trend line right here, support line on the daily, and we're breaking that today. You can see gap down and a break. Again, Microsoft's got big negative divergence. It's been building for quite some time. Most of these have big negative divergence that's been building for quite some time. That's a general theme, I think, in most of the markets. You've got big negative divergence signaling that you're going to see a big trend reversal. And usually the bigger the divergence, the bigger the move. So I'm looking for a pretty sizable move here. It doesn't have to be a complete crash. Doesn't have to be the top of the bull market. But it looks to me like it's going to be a pretty sizable move, 10 to 20%. Apple's below that key level of support I've been talking about for quite some time, really, going back to, the summer and stuff. And that level was right there at 144.53. So I've been watching for a break of that, and there it is right there today. So let's see if we get the daily close below there, or if they're able to rally this up and recover it. But as of right now, we're below that key level of support, which tells me that, a daily close below there, and we're heading a lot lower. I would say minimum target for Apple would be this upward trend line right here. And I've got it kind of marked out right there. I got a lot of lines on Apple, but there's the trend line right there. So depending on when we would get down there, 133, something like that, that's a move of about another 7% or so. So that's what I'd be looking for in Apple, is to run down and hit that support line. Again, that's where the buyers will most likely be. And if that breaks and you actually break that, that's your next major sell signal. That's going to be signaling that we've actually got something bigger going on. So far that's looking weak. Here's Facebook. Big bearish rising wedge on Facebook coming off the March 2020 lows. And this is the bearish rising wedge I've been talking about. Again, we were waiting for a break, and there I had this line marked out, but waiting for a break of that trend line support, and there it is. Not super impulsive yet. We need to see if we can get that close, that daily close. But as the day progresses, if this continues to just sell off and look weaker and the selling becomes more intense, then that's going to be a break of trendline support. That's a sell signal in Facebook. Again, this was all forecasted by these negative divergences. See the momentum dropping off. Again, if you guys are new to this subject matter, this topic, and you don't understand what I'm talking about when it's negative divergences and all that, take my stock market technical analysis course. It's a $99 course for about 4 to 5 hours worth of video trainings. And I think for that value, you're going to get a lot out of it. So check it out. Link in the description below. Again, guys, my style of trading, oftentimes, when I call out trade ideas, they don't work right away because you're going counter trend, right? When you're looking for divergences, you're looking for the momentum that has been moving in one direction to start to, it's fading and it's about to reverse. So in that little final blip, before the momentum reverses, you're looking for, it's counter trend. So the trades don't often, you're not rewarded right away. And I think a lot of new traders have a hard time taking trades that are not rewarded right away. They want to jump in and just instantly be rewarded. I was right, But what I'm really looking for is I want to be right in the end. I want to be, if I'm wrong in the very beginning, and then the trade goes, starts to go in my favor, and then I'm right in the end. That's really how this trading strategy works. So again, check out the course if you haven't done so. That's what it's going to teach you. It doesn't work all the time, but it does work often. Here's gold. So gold is looking okay, really. We're holding this level right here at 1756. Maybe a potential head and shoulders, inverse head and shoulders. We'll have to see. It's a little early to call, but you could have a shoulder here. This big drop was your head, and then here's your shoulder holding that support. So in order for that to remain valid, we need to see this hold, this 1750, 1755 area. You want to see that hold. And then we'll probably want to see it move all the way back up to this area, about 1830. And that's your neckline, I would say. A break of that is going to set this up for a sizable move, pretty much to all-time highs. A little early to call on that, but possible. Inverse head and shoulders starting to build. Looking at the divergences, still have that bullish divergence that was put in on this low. So this low price right here, and see the momentum, how it's higher than the former low. So here's your price, here's your former low in momentum, here's your lower price, and your higher low in momentum. All right, so that's your bullish divergence. And that has not been taken out. That still remains. And we're still, so we'll see. If we hold right here, we're kind of possibly starting to make higher lows and higher highs. We'll wait and see on that one. And then the miners are just kind of, they're selling off a little today, but just kind of hanging in there. Nothing really impulsive. I mean, I look across most of these miners, and they're not selling off too bad. I mean, they're some are down worse than others, but in general, like some are positive, some are flat. So yeah, we might have seen the worst in the miners, and now the miners are potentially going to rally. Things to look for. Again, that's what I'm expecting, because we've been building bullish divergence in the miners for a while. So you'll see here, there's your bullish divergence. Again, we need to see the price start to break to the upside, but that's what the momentum is signaling that is going to happen soon. So we will watch. Maybe there's some Fed announcement. Maybe the market's going to continue to sell off and get weak, and that's going to put the Fed on hold. They're not going to be able to raise interest rates or do any tapering, because they don't want to do that into a weakening market. So maybe the miners will start to sniff that out. Okay, a couple actionable trades right now. GNRC, we have a sell signal as of this morning. I want to point out the uptrend line here. Let's get my charts in order. All right, there's your uptrend coming off of March 2020 lows, clear uptrend line. Rolling into the highs, you see the negative divergence that's been building for some while. So I have it circled. That's a divergent high, and then we made a new divergent high, just a brief one right there. So momentum is fading while the price continued to grind higher. We look for a break of trendline support. There it is, breakdown right there. Nice sell signal so far. Pretty impulsive. We're down 4.5%, and looks like it's getting weaker. Here's the hourly. You can see we break. We're selling. So that's a sell signal. That sets us up for a move to the downside. Minimum target on this, I mean, you've got some support right here. This is your first level of support, 385.55. You're likely going to get a little bounce there, but I think that's going to break. Maybe we'll chop like that. This market seems to like to do that, where it kind of chops and then finally it rolls over. But it depends on what the general market's doing. But I would say target would be down here at 287.40, 287.50, right in there. I like that as a target. And that would be a move from where we're at right now of about 31%. All right. So that's what I'd be looking for on that one. Again, it's not going to just work all at once, and it's not going to just work instantly. A lot of the time you'll get the initial sell signal. They'll do a little counter trend move trying to wash out any shorts that took that initial sell signal. Then it'll roll over. So things to watch for, but that is an actionable trade right now. I'm starting to take shorts on that one. Okay, a quick scan just to touch base on all these short ideas I've talked about. And we'll cover KHC, which is actually a long idea. Nike, down more. You can see just down today. Coming into some moving average support. But again, I still think we got to come fill this gap. Minimum target, which is not a gap fill, but would be about 146.21. You can see that's former level of resistance. So I like that as at least a minimum target. And then the potential for a gap fill at 134.99. We're almost to that first target already, so I like it. Continues to work. Ford, I've talked about this one, kind of thrashing around, but working its way lower since that last divergent high right here. And then here's your sell signal, your initial sell signal. See the break of that trend line support, big impulsive breakdown, little counter trend, and we are working our way lower. You can see it now. It's obvious. All right, so down we go, most likely looking at 11.12 as a level of substantial support. So I think we got a little more ways to go. Tesla's been strong, relatively strong. I think we're going to break, though, here pretty soon. I am short Tesla. Again, bigger picture, we are making lower highs and lower lows. So you can see here, this was your last divergent high right up here. And ever since then, we traded down. And then here was a big sell signal or a break of support right there. Big counter trend move. And I think we're going to break to the downside. But you can see this recent high here was lower than this one. So lower highs and lower lows. We are downtrending, even though it's it's not impulsive yet. The big impulsive down selling comes usually at the end of the move. So I think by the time we start to work our way down here, the selling will get more impulsive and we'll look to be covering our short trade into that weakness. Starbucks. Okay, so Starbucks was a short that I called out right up here. This is where I shorted it right up there. We've been selling down. And we're playing out on this bear flag. So look, there's your flag or your flagpole. Here's your flag, and then here's your continuation move. So minimum target on this one, and we're not quite there yet. It looks like we're bouncing off a moving average, but I think we're going to at least get down to this 109.50, and possibly a lot lower. There is the potential to get all the way down to this 93, 92 area. So that is still looking good, but that's a pretty lower probability all the way down here. I would say 101.26 looks good as well as a possible target. Still looking good on that one. Net's starting to look like a short right here. You can see that we have this uptrend line here on the daily, and we have negative divergence, big negative divergence that's been building. It's usually a prerequisite for most of my trades is, that I want to short. I want to see that negative divergence. There it is, and boom, break of trend line support. Now they're kind of trying to recover it, but I suspect it's going to sell off into the close. So we'll see how that plays out. Not my favorite, but just something I want to point out. Here's EMR. Again, coming down to that support level right there at 93.50. So you can see we're kind of bouncing, getting a reaction. I suspect we get, we probably, probably hold. Maybe we bounce up a little bit or just kind of grind around in this area for a few days. And then we're going to likely break. So the reason why I would say we were going to break to the downside is we've already hit this level. You can see we were holding here. We hit it there. We already hit it once here, and we're coming down pretty impulsively, just pretty much straight down, right in that level. So yeah, maybe we get a little bounce, and then we're going to break. That's what I suspect. And then I would look for, I marked it in green right here. This is the possible final target, I think, at 78.32. That was kind of a key level of resistance back here in 2018 and then 2020. So it should be major support. You can see we also held that right there as support. So I would say a move back down to there, hit that, and likely call that one good on that short trade. But that's still a pretty substantial drop from where we're at. That's another move of about 17% or so. Still looks good there. BlackRock, again. So I talked about it back here when they were rallying this thing against our position. I said it. I thought that we were about finished. We didn't quite get the full back test of the downtrend line. Here's your downtrend line coming off the March 2020 lows. And so it was an uptrend line right there. We broke. There's your sell signal area. This was really a clean sell signal, but you could have taken it right there. It broke support. And then they did this big back test, counter trend rally. Didn't quite get to the full back test of the trend line, and the seller stepped in. So as we started to get there, I suspected we were going to start to sell, and I talked about that on those days. And sure enough, selling right down. So here's support right there at 840.90. You can see this is where we kind of chopped it around here, but held support there, held support there. So we've had two tags of that. We're probably going to get a reaction here. Maybe we fill the gap and then sell down. But I suspect we're going to break to the downside and head down to some more substantial levels of support. We've got some support down here at 790.30, and then we got some support down here at 669.45. So I'd be looking for those levels in the near future, even though I think we'll probably get a reaction here, maybe a bounce. AMG, talked about this one. So again, here's your uptrend line. And again, these trades, when they start to work out, it's usually not the time to take the trade. By the time you realize, oh, that trade actually is working out, you're late to the game. So that's usually why I have to talk about these trades and point them out. Even though when they're moving against me, I still talk about the potential trade that I think is going to play out. And so AMG, you can see uptrend line, clear uptrend line here. We put in negative divergence right there. There's your negative divergence. So this was a divergent high, and this was your last divergent high. We then broke trendline support, big sell signal. I have that marked out. And you can see they kind of grind it against you, make you second guess your position. But again, nothing technically was broken. We broke the major uptrend support. This is the uptrend. It broke. A little bit of counter trend, rally as the dip buyers that don't really pay attention to charts just buy the dip regardless. And then they wake up today and, give it all back basically. So you can see pretty much all this price action was just taken out with this one gap down today. And that goes back to July. So big part of the summer given back in one day. And that's the nature of shorting, is when things move, they move impulsively and usually trap in those late to the party longs. We're coming down to, so we got some support here at 148.65. It will probably get there today, but we'll see. And, that's decent support. Now, what I'm looking for on this one is a move to drop down and fill this thin zone right here at 118.40. I think once we get through this and this moving average that's just below, we're going to head down to 135.14. And then a break into that, I think it'll be a swift move down and come down to this 118.23. I see that as good support right there. It's a thin zone because you had this one big ripping candle and then all this trading action all through here. So if we, for some reason, start to get in here, we're going to trap, or all these people that went long in this area, they pretty much start to lose money once you enter in to the below 135, and they become sellers for the most part. So that's what I see. If we can get down there, we're going to move swiftly down to that 118.24 area. For me, that's the trade for right now, and that is a move from where we're at right now of about 22%. So I still like that one, still looks good. And the long KHC, you can see technical analysis works. I mean, the market is selling off, and a lot of these stocks are selling off pretty getting hit pretty bad. But then the one long that we have, it's not up, but it's only down 1/4%. It's basically flat. So, that's because this thing's already sold off quite a bit. We have bullish divergence here, and we're holding, above this downtrend line. There's a downtrend line. We broke out, and we've been kind of back testing it for a week or two. Still holding up. I think we're going to break to the upside on this one. I don't know when, but that's what it looks like to me. So we're just going to stay with it until proven wrong or proven right. And again, target on this one is this big gap fill level right up here at 48. You can see the big gap from back in 2019. And I would look for a move all the way up, fill that gap, and then we'll probably call that one good. So still like that one. All right, that's all I have today, guys. Pointed out a couple new trade ideas. Leave me a thumbs up if you guys find value in the content. And leave a comment below if you guys are learning here or what's going on. So thank you. Catch you on the next one.